Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me today is Shrishti Sharma. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first up, let's take stock of how the markets are shaping up. Shrishti, we were penciling in that the markets are likely to be range bound within the 23,600 to 23,900, and today we have managed to test both the levels. 23,900 is what we kissed, and then what a sharp blowout after that. In fact, we are not even managing to hold on to the 23,700 levels. We're below that now, in fact.
Well, certainly, Ankita, like you rightly mentioned, and this is a very crucial level to watch out for, that whether or not markets will sustain that 23,700 support level or not. Because for today, what we are seeing is that there's been a lot of volatility because India Wix has actually shot up 7.5%. What we are seeing is that Nifty Bank as well as Nifty 50, they both have given up those mid-session gains. For Nifty Bank, that's a cut of around 360 points. Nifty 50 down about 120 points. But a lot of stock-specific action. First up is Aditya Enterprises on the back of brokerage note, 6.5% gain. Shriram Finance, Cipla, Sun Pharma. These are the counters on the Nifty 50 that are on the gaining side. But on the flip side is the metal pack. Leading from the front is Hindalco as well as JSW Steel that are a bit under pressure. Even some of the IT counter stocks like Wipro are seen to be a bit under pressure. And from the auto pack, the weakness continues. Stocks like Hero MotoCorp, Bajaj Auto as well as Tata Motors are seen to be biggest drag on Nifty 50. But a lot of stock-specific action, Ankita, is what we're going to highlight in the next 1 hour.
Absolutely, Shrishti. So let's get started then. And let me invite Aditya Agarwala, who's the Head of Research and Investment at Invest for Edu on the technicals. And from our research team, we are joined by Ansh. Hi, good afternoon to both of you. Thank you so much for joining us. Let's get started with all the stocks that have been focused today. And like Shrishti mentioned, the top Nifty gainer for today is Adani Enterprises. And this after, in fact, it was up 4% today, after the brokerage firm Ventura Securities, has hiked the target price and set it to 3,801 for the next 2 years. In fact, the target price indicates an upside potential of nearly 58% from Friday's closing. In a bull case scenario, they feel that the brokerage feels that the stock is growing 138%. Now, Adani Enterprises is targeting a 6.5 lakh crore in capex over the next decades for its expansion into airports, data centers, copper and green. And also, it's over FY24 to 27 estimate, the brokerage expects Adani Enterprises consolidated revenue, EBITDA and net earnings to grow at a CAGR of 17.5%, 37.5% and 45.8% respectively. And on the back of that, they have hiked the target price. The EBITDA and the net margins are also projected to expand by around 647 basis points to 18.3% and 255 basis points to 5.9% respectively. They feel that strong growth in airports and solar businesses and the revenue contribution from copper are expected to enhance the financial performance and the profit margins for the company. And as a result, the return, the ROE and the ROIC are expected to improve by 563 basis points and 99 basis points respectively. And on the back of that buy call, Adani Enterprises is up in a way.
Well, certainly, big target set by Ventura. But moving on then, let's shift focus to Tata Consumers. And Aditya, very good afternoon to you. First up, let's talk about this counter because the FMCG basketing is showing a bit of a resilience. But what specifically are you targeting for Tata Consumers? Up for a bounce or more weakness can continue?
Good afternoon, Srishti. Good afternoon, Ankita. Thanks for the show. I would bet for a bounce from current levels because, as you mentioned, most of these stocks, if you see within this space, have corrected and now forming a base. Tata Consumer too, if you take a look at Srishti, has been correcting for some time now. Interesting thing is it took support at 61.8% Fibonacci retracement level in the correction and then formed a beautiful base. And now it seems to be coming out of that base formation. So risk to reward is also in favor of going long at current levels. I think on the upside, stock can easily test levels of somewhere around about 1,100 to about 1,200 on the upside. So that's a decent upside that I'm looking in the stock. On the downside, immediate supports are close to about 890 odd levels. So if you take a look at the risk to reward, that is also in favor of going long at current levels. And the RSI has found a positive divergence with respect to price. So that tells me that a bounce back or a short covering rally in the stock is due, and that should follow anytime soon.
Right, that's about Tata Consumers. Then we're moving on. Let's shift focus to Vodafone Idea because this stock is buzzing in trade today, definitely on the back of two positive news flow. First up is the stamp coming in on the bank guaranteed relief, because Department of Telecommunication has waived off the requirement of bank guarantees which were to be submitted for spectrum auction held before 2021 under the telecom reforms. This is prior to this reform. The bank guarantees amounted to like 24,800 crores. They were required to be provided by Vodafone Idea, and now no bank guarantees requirement will be provided for the year 2012, 2014, 2016 as well as 2021 auctions. And this is the waiver that is coming in for Jio as well as Bharti Airtel as well. So indeed a positive news flow for both of these companies. But for Vodafone Idea, another positive trigger is that given the improvement in the financial situation, Vodafone Group has actually cleared 11,650 crores of worth of dues. They have released the pledged shares in Vodafone Idea. As of June, VIL's payment commitment to the government was over 2 lakh crores. That included 1.4 lakh crores in postponed spectrum payments and AGR debt of more than 70,000 crores. So indeed, on the back of these two positive news flows, Vodafone Idea is in focus.
All right, moving on from Vodafone Idea that's in focus today on the back of that news flow to Muthoot Finance. Aditya, this stock is very close to its 52-week high. In fact, it is hovering around those levels. So from here on, what is the upside? What are the levels that you're penciling in?
Ankita, I think 2200 is something which is very much on cards as far as Muthoot Finance is concerned, and as rightly pointed out by you, stock has been constantly making higher highs, higher lows. Recently took support at the 20 DMA, and from there it bounced back. So 20 DMA, which happens to be a very crucial moving average, an immediate term moving average, will test the immediate trend of the stock as well. So stock has been taking support at that 20 DM, and from there it's bounced back, which is acting as a stop loss line. So I think 2060 on the downside is a good support area which can be used as a stop loss line, and 2200 on the upside can easily be tested in the near term if somebody holds on to it for at least a couple of weeks. And if I plot RSI and MACD, both are confirming the strong bullishness that is prevailing in the stock. So thumbs up from my side as far as Muthoot Finance is concerned for a target of 2200.
Right, 2200 is the target for Muthoot Finance with the levels that Aditya just highlighted. But let's shift focus to KEC International, and Ansh, take us through what's happening here. The stock is moving away in trade today.
That's right. So a company has made many investments actually. Firstly, they have executed business transfer agreement regarding transfer of cable business of the company to KEC Asian Cable, which is a subsidiary of the company. In addition to this, they have also made investment in the equity shares of KEC Asian Cables up to an amount not exceeding 118 crores by way of subscribing the right issue. Also, they have made investment in the equity shares of KEC Power India Private Limited up to an amount not exceeding around 6 crore by way of subscribing the right issue. Now, on the back of all this investment, the stock is up by more than 2%. Also, if you see on chart, then stock seems to have snapped its 4-session losing streak and has also surpassed above its 20 DMA, which is a positive sign.
All right, moving on from KEC to Jubilant FoodWorks. Tell us, Aditya, what are you seeing on the charts for this one? This one has given some good returns, in the last 6 odd months, 24% returns. In fact, the chart also looks strong. From here on, where do you see this counter headed?
It's a fresh breakout, Ankita, as far as Jubilant FoodWorks is concerned, from a bullish cup and handle pattern. And I think you will see easily levels of 750 on the upside if one holds on to it for maybe a month or so. And this is a very strong looking chart setup amidst all the selling pressure that we are seeing in a lot of these FMCG stocks. Maybe Jubilant FoodWorks is something which is showing strength and can test levels of 750. As I mentioned, on the downside, 690 is a very strong area, support area, which can be used as a stop loss line. And then plus the recent up move was backed on good volumes as well. So overall, I think it's a healthy looking chart setup. One should definitely look at fresh long additions here.
All right, those are the technical levels to watch out for Jubilant FoodWorks. But with this fears, it's time to slip into a very short break. But before we go, 2024 was a melody-filled year for India with iconic concerts by Ed Sheeran, Diljit Dosanjh, Dua Lipa and Maroon 5. Music lovers were treated to unforgettable performances by global and homegrown talent. And the good news is that even as we bid goodbye to 2024, the best will continue to play. 2025 is promising to be just as exciting with Ed Sheeran's Mathematics Tour and Coldplay's Music of the Spheres World Tour lined up. Well, get ready to groove and take a look at this report. Welcome back to Market Farafat on ET Now, where we are highlighting all the buzzes in trade right now. And now let's put the spotlight on Ipca Labs. This counter is in focus on the back of Motilal Oswal report on this particular counter, where they are actually giving it a buy rating, but the target price they have set is 1980 rupees, and that's close to 19 to 20% upside even from the current market price. What they are highlighting is that the company has been scaling the US operations, and in the Indian markets they have been outpacing the IPM growth to aid the robust earning growth in the times ahead. Other than that, they are considering that 27% earnings CAGR should be there between FY24 and 27. The return ratios are also expected to improve, and what they are saying is that they factor in better operational efficiency, a revival in the US business, the synergies from the Unichem acquisition, and a well-established domestic formulation business is what they are penciling in. There are some of the key growth drivers for the US in the next 2 years is what they're highlighting. The market is ready to have a strong momentum. So all in all, we do like Ipca Labs even in current market price, and 1980 is what they are targeting on this counter.
All right, moving on from Ipca Lab, on the back of that bullish brokerage note that has come in. Now, on the charts, Aditya, what do you see for Ipca Labs? I mean, at least on the brokerage, going by the brokerage note, they see a 19 to 20% upside. But on the charts, what do you see for Ipca?
I think stock can easily test levels of about 1800 to about 1850 on the upside if one holds the stock for 1 quarter. And a very beautiful looking chart that Ankita. Stock has been making higher highs, higher lows, and clearly has broken out from a rounding bottom pattern. It was a good consolidation that the stock entered into, and from there it's broken out now. So definitely headed to levels of 1800, 1850 on the upside. On the downside, support is at 1600. RSI has moved just beyond the level of 60, so that is a sign of strength and bullishness in the stock. Overall, I think it's a very healthy chart, and one should definitely look at adding this in your portfolio for at least a target of 18, 1850 on the upside.
All right, moving on then to BPCL that's in focus today on the back of the fact that they're likely to invest $11 billion in southern Andhra Pradesh state for a new refinery and petrochemical project to meet rising fuel demands in the world's fastest growing major economies. That's the word coming in from the chairman. In fact, India wants to emerge as a major refining hub supplying fuel to the global markets as Western companies are cutting crude processing capacities in favor of the energy transition. Now, the project will have a 35% petrochemical intensity and is likely to cost anywhere between $10.5 billion to $11.14 billion. On the back of that, BPCL is in focus. It has given up those midday gains. It is currently reeling under selling pressure with cuts of 0.8%.
All right, that's about BPCL then. But moving on to the next counter, and Aditya, one more consumer name on your radar, and that is Marico. The stock is seen to be flirting with its key moving averages. Is this stock too ready for an up move?
I think, Srishti, so the couple of sectors which are actually standing out, one is FMCG and the other is pharma. Clearly picked out quite a few from them. And talking about Marico in particular, it has broken out from downward sloping trend line after a good base formation. RSI, if I plot it, has taken support at 50. From there, it's moved up. I see a trigger crossover on MACD as well. So overall, all the parameters are suggesting that an up move is due in the stock and can follow through any point of time. On the upside, I think stock can test levels of 650 to about 700 on the upside. So it's a good upside that I'm seeing in the stock. On the downside, immediate support is at 625. So with the stop loss just around 625, you can definitely look at a target of 650 to about 670 on the upside.
All right, moving on then, Marico to Ansh. Cholamandalam is the name that you picked out for us. Another brokerage note candidate. Tell us, what does the brokerage note say?
So JP Morgan has come up with a brokerage note on this stock and they have maintained overweight rating with a target price of 1550. Currently the stock is trading around 1210, so around we can say 28% potential up move on upside. And as per JP Morgan, recent correction has offered a favorable long-term risk-to-reward ratio for the stock, and hence they have given this 28% target. They also believe that company can build a diverse retail franchisee over medium term. Also, company has pan-India presence and has focus on collections, which is a positive sign for the company. They've also said that the mortgage segment is a key growth driver for the company, and they estimate 26% FY25 to FY27 EPS CAGR. Also, if we see on chart, then stock has been advancing for fourth consecutive session, and last week on weekly chart it seems to have taken a good support at that 100 DMA and have been giving good recovery since then.
Alright, that's about Chola Investment. But moving on, Aditya, the next counter is Eicher Motors, and all in all what we are seeing is that there's been a bit of a weakness that is continuing in the auto space, but is Eicher Motors defying the trend, as well as where do you see the stock headed?
We would want to feel, and it looks like it is defining the rest of the auto packs, and then has taken support at 200 DMA, very crucial support for the stock, as you all know, and recently moved beyond it. It's 20 DMA as well. So overall looks like stock is headed higher, at least to levels of 5,100 on the upside, which provides a decent upside from current levels. And on the downside, 4,800 is a good support area. What is striking for me, Shrishti, is that throughout this corrective phase that we witnessed, the stock has held its ground and has corrected significantly. In fact, it entered into consolidation phase, and from there now it's breaking out. So that's a very positive sign for the stock. So 5,100 is my first target on the stock, with the stop loss at 4,800 on the downside, and definitely all the moving averages and technical indicators are supporting this bullish view.
All right, with that, it's time for us to slip into a short break. But before that, a little programming note in today's episode of Leaders of Tomorrow, Season 12.
If you like this video, then like, share and subscribe to ET Now.